what are we doing? We are getting ready to host one of the biggest shows that you've ever seen in your life. That's what we're doing. That's what we're doing. Okay. Self-directed IRAs, velocity banking, okay, business credit, all together, all in one. Can you guys say set for life? Go ahead, say it. Say set for life. Set for life. Can I just have you call me? Absolutely. CreditWiz at investorpro.org. If I don't have your email, I want you to email me, okay? CreditWiz at investorpro.org. All right, we need you to do that. CreditWiz at investorprod, just joking, .org. Okay. There's no D in investor. All right. No D in investor pro. Okay. investorpro.org. All right. There you go, Jen. Hey, go ahead and say your first name and the state or the country or the planet or the star that you are tuning in from right now. We're going to show you something that you've probably never seen before in your entire existence as a human being. So we just want you to be ready, okay, because it's going to be live. This is live, okay? And we're going to be starting in about 11 minutes, okay? In about 11 minutes, we'll be starting. We just want you to just sit back, relax. This is a perfect time to ring that bell, okay? Ring that bell. Ring that bell. Give us a thumbs up. Comment, all right? Ask me your questions. Ask you get started. Ask how can I get started in a self-directed IRA? Ask, hey, what is it that I can do in order to be set for life? Ask, what is it that I can do to give my family legacy wealth? You know, I was just reading about Rothschilds, the Rothschilds family. Do you know that the Rothschilds, okay, Rothschilds, their family's net worth is $400 billion? Now, keep in mind that Jeff Bezos, okay, the founder of Amazon, his net worth is $100 billion. Now, can you imagine your family, okay, being worth that much? $400 billion. That's almost half a trillion, folks. Okay, almost half a trillion. He's 100 billion away from half a trillion. Okay, and it's because they are forefather. Man, long story short, let me tell you, he was part of a royal clique, if you will, back in the Holy Roman days, and he was really a banker, very ruthless banker, but he also did some things, okay, and some principles, okay, that were right, and that were wise, okay, that we want to show you some of that, just a little bit of that tonight, okay? So we definitely can't wait to get you started, okay? We're going to be starting in about 9 minutes. 9 minutes we're going to be starting. So, man, go get somebody. Go grab somebody. Go share this with someone. Share this on your Facebook page. Huh? Because each time that we get together, it's something that you may have never, ever thought of before. Okay, maybe it's something that is brand new to you. Maybe these are things like that debt to income, that living debt to income that we showed you. Hey, your bank isn't showing you this. And you trusted them, right? They weren't showing you that, they make their calculations on the gross, but when do you spend the gross? Okay, you only get paid on the net income. And so that was a real heartbreaker for some, and that was very exciting for others because now they know what to do. Now they know how to calculate their finances. A lady contacted me today, and she said, CJ, I paid off my... Really, she said this, okay? And she said, CJ, I paid off my auto loan. It wasn't a car, it was a truck. I paid off my auto loan. And I just had to ask her this question. Okay, I had to. And I said, how did you pay off your auto loan? You know what she told me, y'all? Guess what she told me? Come on, guess what she told me? How did she pay off her auto loan? Go ahead and participate. Yell out the state or the country or the planet that you're from, all right? And your first name. I want to show you some love tonight, all right? Yeah, what did she pay off her auto loan with? And this got me so fired up when she said this, okay? Oh, man, she got me fired up. Watch this. She said, I paid off my auto loan with my savings account. Now, really, watch this. What makes this so unique, okay, and exquisite and amazing and fascinating is that this woman started her email to me, okay? Now, we've been communicating, 42, I think 50 times now, right? Back and forth, back and forth, back and forth. Me showing her the calculations and helping her to get out of that frailty, that scarcity mindset, okay? But I showed her and her husband, okay, how to have the cash flow mindset instead of the accumulation mindset, because she started her email out to me like this: married a saver. Married a saver. So before they were saving, right? They were savers. And now they're on the beginning roads of being cash flowers. Okay, now watch this. Before they were savers in the scarcity mindset. Now they are cash flowers. And what I want to do is I want to keep you updated on each and every one that communicates back and forth to me with the good news of cash flow checking, of cash flow checking, of cash flow banking, of velocity in their finances, of velocity in their cash flow. And I want to keep you updated on that. Is there anyone that has questions right now on what velocity banking is about, or what business credit is about, or how do I get a self-directed IRA? Do you have any questions? If you got questions, don't hesitate to ask. We're here for you, okay? CreditWiz@investorpro.org. We want to definitely answer those questions and give you a demonstration. We're going to give you a demonstration tonight of what we have in store. Has anybody ever heard of the Thousand Doors Project? Has anybody ever heard of rental income? Have you heard of rental income? There's a man today, I want to give him a shout out. His name's Dwayne. This man, in my conversation back and forth, you could tell he's very serious. He's very serious about where he wants to go in life. Okay? He had a recent tragedy in his family. And he was letting me know, CJ, I want to make my mama proud. And that's one of the greatest joys of a man, to make their mama proud. Okay? To pass on legacy wealth. To say, Mama, here's the Jaguar that you always wanted. To say, Mama, I know you couldn't afford a house because you had us running around, you know, and you had to stay in this place and you had to stay in that place. And maybe it wasn't the cleanest. Maybe it wasn't something that you dreamed for us. But Mama, you no longer have to stay there. Why? Because I changed my mindset. I changed my mindset about my finances. I changed my mindset about IRAs. When the banks and the financial institutions and these wealth managers, many of them well-meaning, these wealth managers told me that, no, I can't self-direct my IRA. CJ came along and educated me the right way and said, no, it's not that they can't do it. It's that they won't do it. Now, I got to say that again, okay? It's not that they can't tell you and show you and put your funds in the self-directed IRA. It's not about that. It's just that the administration costs are just too high for them, okay? You got to know where to go. And folks, you know, and I know where to go, where to put our finances. how to put our finances in the right vehicles. Velocity banking, business credit. We want to show you that today. All right. Donald. All right. It's good to see you, Donald. He said, I have a truck note, $16.25 a month. How can I pay it off quick? Awesome, Donald. Thank you so much for tuning in. That is a great question. You want to know how to pay off a $1,625 truck note. All right. Well, this is how you do it. CreditWiz@investorpro.org. I'm going to need to see your income. I'm going to need to see all of your expenses, even the loans. Okay. And we'll go from there. Okay, Donald? It's going to be a one-on-one consultation, just letting you know how to pay that loan off so that it's best for you and your family. Okay, so you don't have to pay a gargantuan amount of interest, okay, on those loans, but you can put that money back in your pocket. All right? Absolutely. Folks, we're almost getting started here. If you got any questions, don't hesitate. Go ahead and ask them. All right, absolutely. Because what pays the line of credit down? Because you'll be paying that truck loan, all right, Donald, you'll be paying that truck loan off with your line of credit. And what is it that, quote unquote, pays down that line of credit? It's what's left after you subtract your income minus the expenses. Okay, that's what pays it down. And the velocity, the more cash flow that you have, the deeper and faster you're paying off that quote unquote debt. Okay. Quote unquote debt. Okay. Line of credit is not debt. That line of credit is your new checking account. Oh, awesome. I am a owner and operator of my own trucking LLC. Awesome, Donald. Donald, do you have business credit? Boy, I love my truckers. Okay. They've got great stories of how they went from no credit to $816,000 in business lines of credit. And now they are just leveraging that capital for themselves and their trucking business. I love the truckers. I really do. That's amazing. Good job, Donald. You got you're owning your own rig. Yes. And my heart goes out to you guys. You are on the road, Jack. Man. Night, day, snowing, it's raining outside, sunshine. I bet you guys love that, right? We're going to show you how to get business lines of credit for your trucking business, okay? I'll give you one hint. You got to start off with the vendors. You got to know the lender's underwriting guidelines, which we know, okay? You got to know that proprietary information of the vendors, which we know, okay? You got to do that. Boy, we got something planned for you guys tonight. It's going to be awesome. Whew. How many of you own triplexes? How many of you know how to get a rental, okay, without your money? You don't have to dig into your pocket, okay? And I actually asked this question, and it's pretty intriguing. The question was, why would you ask for $20 when you can ask for $25,000? Why would you ask for $20 when you can ask for $25,000? All right? And the only difference is the way you word your statements. We're not begging folks. We're showing them an opportunity. We're casting the vision, and they are taking a hold of that vision. All right? Awesome stuff, folks. So if you have any questions, don't hesitate. Go ahead and let us know what those questions are. We want to answer them for you. All right? Absolutely. Boy, I'm looking at this and what we got lined up tonight. You guys are in for a treat. This is amazing. Okay? Awesome. I have my DUNS number and EIN, Donald. That's good. That's a start. You're doing a good job with that DUNS number and the EIN number. That's what you need to start building business credit, okay? We want to help you. Now, Ms. Bernie said, I used the velocity strategy to pay off my home. Did you? HELOC was my debt weapon. I did it in 1 year to speed the payoff sooner. I tapped into some savings to speed up the payoff, she said. It's so simple to work. Just try it. Now, Miss Bernie, if you don't mind me asking, that your home, did you say 1 year it took you to pay off? Oh, that's awesome. That is awesome. 1 year. Everybody, give Miss Bernie a hand clap. Miss Bernie, you got to stand an ovation. Okay? It's a standing ovation. Why? Because paying off your home in 1 year opposed to 30 years, opposed to, yes, 148,000. And I was going to ask that, but I backed up. So thank you for reading my mind. Awesome. Awesome. 148,000. She said she paid it off in 1 year using the velocity banking strategy. Folks, believe me and believe the math. Okay? Just believe the people that work this. All right? Absolutely. You know what I've heard? I've heard it this way. That the glory of the king is known by the wealth of its citizens. And I'll say that one more time. The glory of the king, right, is known by the wealth of his citizens. And so the one thing that I want for you all is to surpass me, okay? Is to surpass what we teach, okay? To surpass it, okay? And so I believe that you guys are doing that. You're taking this and you're applying it to your situation. You're applying that capital to your properties. You're applying that capital to your house to pay it off sooner. And now where does that money go? Where does all that cash flow go? Back to you. Back to you. Now, keep in mind that you got rid of one debt, right? But now what happens is when you get rid of that debt, you're back at zero. Well, that's not good, because I know that you're not worth nothing. You're worth something, right? So now you got to get past that. And that's what we're going to bring to you tonight, all right? We're going to show you how to get past zero, okay, and to increase your net worth so that you and your family have what is called legacy wealth, okay? So that you can pass down something more than precious memories. All right. Precious memories are precious. All right. Precious memories are where it's at. Okay. We want you to pass down even more than that. Okay. So that's where we want you to be at tonight. Hey, any more questions? Please go ahead and ask. That's what we're here for. You guys are awesome. Awesome guys. Now, if any of you think that, I know that, this velocity banking strategy works, but my spouse or my girlfriend or my boyfriend or my mom, my dad, my family member, my friends, they don't think that it works. I tell you what. CreditWiz at investorpro.org. Folks, I understand. I understand completely. Okay, I know how it is. People that have never maybe ventured out outside of their box, how they've never wanted to actually obtain the American dream or to go forward in their pursuit of economic independence and financial freedom, how that they can kind of pull you back, and they're well-meaning folks, okay? They're well-meaning and they're doing it because they love you. They're doing it because they care for you, all right? And absolutely, I wouldn't trade those kind of friends or family for the world, all right? But we do want you to know that people are having success in doing this, okay? And it's so simple to do once you're shown, all right? My mom told me this, okay? She said, CJ, because I was facing a challenge. I was facing a challenge that I'd never faced before, and I think it was something in school, and it was just something that was kind of getting the best of me. And she said this, she said, CJ, this isn't hard. And so one would say, wait a minute. Yes, it is. It's a challenge for me. It's hard. It's not easy. Mom, I'm not as smart as you. But she said, No, it's not hard. It's just new. It's just new. That's all it is. Did you know at one point in time, 2 plus 2 was a challenge for you? Oh yeah, absolutely. 2 plus 2 was a challenge for you. 1 divided by 1 was a challenge for you. 1 minus 1 was a challenge for you because you didn't know until someone came along, right? Like a teacher, and showed you. Even to the point where now, when I mention 3 plus 3, you already have the solution. When I mention 10 plus 10, your brain already thought up the solution.
Yeah, get a calculator.
You know? Listen, folks, we want to do the same thing with real estate investing for you. So that you can look at a deal and you already know what to do. Really? No, it's that easy, really. We want you to look at your finances utilizing the Velocity banking system and you already know what to do. You already have it in your mind. We want you to be on unconscious competence level. What is that, level 4? Level 4. We call it level 4. And I can go ahead and show you more of that in another video, but unconscious competence. So where you're already solving that rental problem, where you're already solving that fix and flip problem, where you're already solving that fix and flip or that wholesale or that lease option problem. We're already solving them in your mind. You already got it, okay? We want to get you to that place. With business credit, we want to get you to that place of having well over millions of dollars in business lines of credit for your business. For your business. It's possible. It is possible. Folks, go ahead and ask those questions. Does anybody answer those questions?
If you're ready.
Oh, awesome. Awesome. You need more info on obtaining business credit, Ms. Bernie? We're going to give you more. Okay, creditwiz@investorpro.org. Go ahead and email me. I'll give you more information on the business credit. We're actually doing the business credit right now. We're going to show you business credit, velocity banking, and self-directed IRAs. Now, folks, I'm so excited. The guy that I'm about to bring up right now, he's a successful everything. Have you just met someone who can do it all? Okay, look, he owns a fix and flip business, multi-family units, just a successful serial entrepreneur. Let me tell you, he is killing it in the field. Not only that, but this is the guy who introduced me to this way of thinking. Okay? No, really, watch this. This is the guy who introduced me to this way of thinking. He needs no introduction. Many of you already know him. His name is Joseph Smith, and he's coming up and teach us tonight. All right? Joseph,
All right.
Thank you so much, man.
Thanks for having me. Hello, YouTube. Welcome. Now, I don't know if they're going to be, I'm going to be writing some stuff up here, so make sure you get that camera close enough.
Oh,
I'm
absolutely.
excited, CJ.
Yes.
Man, I'm giving away the shop today.
Uh-oh.
You know
Giving it
what I'm
away.
saying?
There we go.
You know
Might
what
as
I'm
well.
saying? I'm gonna roll back the curtain today.
Roll it back.
Okay.
That's awesome.
So, so first of all, can you zoom in? Are you able to zoom in so people can see what I write up here?
Oh, yeah. This is perfect right
All
here.
right, okay. All right, folks. CJ told me that he's got a lot of people that are asking questions about self-directed IRAs. So let's write that up here. SDIRA.
Perfect.
In case you ever see the acronym, what's a SDIRA, right? Self-directed IRA. Some people are like, what is that? Some of you already know. All right, so there's a couple of scenarios where we hit that. Does anybody have an old 401k? Old 401k. Something just sitting out there. Maybe you do, maybe you don't. You should probably take a look. All right. Some people have a current 401k, right? This is something that your employer right now and you're contributing to every paycheck. And then the third scenario is you have an IRA, something that you're contributing to or you've already contributed to, you just have it, it's sitting there, it's whatever, you're probably investing in some kind of mutual fund, probably. All right, so are where people's retirement funds traditionally or typically are located. Okay? So how do we get from here to one of these things, a self-directed IRA? Because, I mean, self-directed IRA, what does that mean? Self-directed. Well, if I put money into a regular IRA, or I put it into my current 401k, or I have my old 401k, I am not actively directing those funds. I am turning it over to the Prudential, to Merrill Lynch, to who knows who, right? You're turning it over and they're making decisions. Some brokers out there investing for your company and for your risk tolerance, you probably choose your risk tolerance sometimes, or how much you want to contribute. Like you have certain toggles that you flip on your employer side, but for the most part, the day-to-day transactions, what happens with the money, that's all handled by someone else. So in all of these packages here, the old 401k, the current 401k, and the IRA, there weren't really any options. You gave it to somebody and they're investing in some kind of stocks, bonds, mutual funds, everything that's, paper, really. So self-directed gives you the control where you direct where your retirement accounts, what they invest in, okay? And I probably need to say right off the bat, the disclaimer that I give every time I come on CJ's YouTube channel, I am not an attorney, right? I am not practicing law. I am not giving legal opinions here. I'm telling you general strategies. And it's up to you to do your own due diligence. Talk to a lawyer, an attorney, talk to your CPA. Make sure that the strategies that I'm sharing with you on this YouTube channel fit for you and your situation and in your local jurisdiction. All right? There, I think I'm off the hook, right?
Perfect. Yes.
Perfect. Okay, so with the self-directed IRA, you can invest in other asset classes, stocks, bonds, mutual funds. That is an asset class, but that's not the only one that's out there. There is gold, precious metals, right? There's real estate. That's what I choose to do. But some people don't even realize that, wait a minute, I've got a 401k or I've got an IRA, and you could become a like that. People don't even realize it because a lot of people think real estate investor. Oh, man, I just don't have the money. I'm telling you, I get people involved in real estate all the time, and this is the most popular way that I do it. Now, here's what happens. Here's the process. So you start here, and if you have an old 401k, you're going to have to do what's called a rollover. All right? I'm not going to go into that, but everybody in the industry, you just tell someone, I've got an old 401k, I need to roll it over. All right? Okay, that's good. Current 401k, all right, that's a little bit different. Now, we can't self-direct a 401k. What we're talking about rolling it over is we're rolling it over and turning it into an IRA that we will self-direct. Okay, that's what we're talking about, this rollover. With a current 401k, the rules are that you can pull out up to $50,000, right? Not to exceed, or one half. One half of the 401k up to $50,000. Now you have to pay interest on that money that you pull out. You're going to pay like 0.25% over prime, whatever prime is. And so, but here's the best part about it. Who's the interest going to? Who are you paying the interest to? Does anybody know? If you take out a 401k loan, this is not a distribution. No, don't take a distribution because then you get taxed and penalized on that. We don't want that. This is a 401k loan.
Yes.
Right? We're talking about a loan. Who does the interest go to? Come on, YouTube. Who does the interest go to?
Who does the interest go to, y'all? The interest goes to, drum roll, please. Oh, yes, that interest is coming home to Papa.
Right? Somebody answer? No?
Hey, it's going to you guys.
That's right. You get the interest. So people are like, man, I don't want to pay interest. I don't want to take a loan. Yeah, but who are you paying it to? You're paying it to you. You're banking on yourself. Mm-hmm. This is great. So you can take this money out, and what do you do with it? Well, you put it into an SD, an IRA. Okay, and then your current IRA, again, you're going to roll over into a self-directed IRA. Now, so you're like, okay, so how do we do that? There's a process. I'm going to show you the process of how that's actually done. Can I have a eraser?
Oh, an eraser.
Or paper towel or something? But, so there's a process here. And the process, oh, awesome. Thank you, Mr. Wallace. Very resourceful man. Okay. So, first of all, with your retirement accounts, your 401ks, there's rules. The IRS, they have rules, right? Because they want to make sure that they get paid their due. And when you start putting money into retirement accounts, there's certain types of tax protections, whether it's a standard IRA or a Roth IRA. There's different ways that you put money in there. But once you have your money in there, once you have your money in one of these accounts, you have to follow the rules. And if you break the rules, there's taxes and penalties, so we have to do it the right way. Now, when you're investing with the mutual funds, the stock market, they're making sure that you're investing in approved types of transactions. So they act as your custodian of your money. When you're self-directing it, ultimately at the end, you're going to become the custodian.
Oh, yes.
Okay, but you have to know the rules. And I'm not going to go over the rules here tonight. There's a lot of them. There's been books written. We're talking about IRS codes, and you need to understand what's a prohibited transaction and what isn't. Because if you mess this up, you will dissolve the account
Yes.
and forfeit all the money to the IRS. You don't want that, right? So it's important that you do this the right way. So I'm going to skip over telling you all the rules to show you the functionality of how this happens. So the rollover, what happens? Well, first of all, you roll over an old 401k into a traditional IRA, or you can make it a Roth, but if you do that, you have to pay your taxes up front right now. Great strategy to grow your money tax-free. But then, once you go from the IRA, you then have to go to a TPC. Well, what's a TPC? This is a third-party custodian. This is somebody that's making sure that you are following the rules. Because if you break the rules, you lose your money, right? So the third-party custodian is going to make sure that you're not putting your money into a bad investment. So the third-party custodian will help you convert, and you filling out the money and you're doing everything. This is typically, there's lawyers, there's people who are specialists with the IRA. And so we go from the TPC to finally a self-directed IRA. But then we don't stop there. Now this process is followed here. So with the current, so you go to, HR, right? If you have a current 401k and you want to pull out your money, you got to pull out, you can only pull out half up to 50,000, right? So you pull that money out, then you need to put it into IRA, then it has to go to third-party custodian, third-party custodian, and then self-directed IRA. This is the process. These are the steps that you have to do. And what's the time frame on this, right? From here, this is like a week, right, to get the money. This is like, a couple of days. This to here, okay, that's maybe 3, 4, depending on who you're working with, 6 weeks, right? This stuff can, because you have to make sure you're following all the rules. And then IRA, which you see up here, we go to the third-party custodian to the self-directed IRA. Okay, but it doesn't end there. Yes, you have a self-directed IRA, but guess what? The third-party custodian is still in charge, so you've just given up one master over here for another.
One master for another.
So how do you get control of the money? Well, there's the next step, which is then to have the self-directed IRA in its own LLC.
Folks, listen to this. This is awesome.
So once your LLC controls actually it's the other way. The self-directed IRA has the LLC. The LLC, so you transfer the money from the self-directed IRA into this LLC that you have checkbook control over. Right over here, you get check book, what we call control. Checkbook control. Now, there are a lot of mistakes. If you don't know what you're doing in this process, all right, this is not something that I'm saying, I want you to do this on your own. This is not a do something on your own. This is hire the professionals in your life. I use attorneys. I use the number one attorney that the IRS and the Congress call to testify professionally at Senate hearings when they are updating all the rules that go along and all the laws associated with IRAs. His name is Matt Sorensen. You can look him up yourself. He is the best. If you want a referral from me or CJ, we'd be happy to give that to you. So, once you have checkbook control, now, here's the thing. Some people try to do this as a way to start spending their retirement money, but that's a prohibited transaction. You cannot personally benefit from this money right now. You can grow your retirement this way, and you can control how your retirement is investing, but you can't like cut yourself a check. You can't go do a fix and flip and put the profit in your pocket. No. All of this, so once you set it all up, right, and you have this LLC over here, and it begins to invest in some kind of house, and you do a flip, or real estate, or let's say, you're getting, gold bars, right? Right, whatever you're self-directing your IRA into, whatever asset class, whatever money you make when you sell, your capital gains and all that goes right back into the LLC and then comes right back into the SDIRA, the self-directed IRA. All right, so you're growing your money. If it's Roth, you're growing your money tax-free. If it's traditional, you're growing your money, but then when you reach 59 and a half years of age or older, then you can start taking your withdrawals off of this.
That's right.
This is wonderful. Okay, I really haven't gotten to any strategies of what we do with this, but when I start talking about self-directed IRA, LLCs, I want you to see how we got there. All right, this is so critical because now, once you know how to do this, and once you have the professionals working with you that can help you get this done, and this costs money, everything costs money, but it costs money to make money. All right, but when you look at the returns that we're going to get, what I'm going to show you, here's what you can do with it. Here is the strategy of what we do. Okay, so I want to show you a business model that Ray Fleming and I put together called the Thousand Doors Project. And it's a way that a lot of people raise money for investing in all kinds of assets. This happened to be how we did it, all right? So what I'm going to show you right now is, let's say we've got some investors over here. Let's call them. And all right, I'm putting these letters over here, and then I'm putting them in boxes. All right, these letters represent the first name of the person. Now, what are these? What you see right here are, well, we'll write right here. These are self-directed IRA LLCs. Okay, all of these right here. We've already taken them through the process of taking money from an old 401k or a current 401k or an IRA and moved it into a self-directed IRA. So now all of these are LLCs and they have checkbook control. What can they do with that? Well, in our business model, here's what we did. So, here's myself. I'm Joseph, and you've got my business partner, Ray. We came together with our businesses and formed Wise Guys in Ties. Hopefully you've been to our website, seen some of the wonderful things we're able to do with business credit. It's phenomenal. But, so that's the starting point. So follow me now on what we do. What we do is we're going to form a partnership, an LLC partnership. Now how do we do that? Well, we are going to, everything in a box that you see me draw is an actual corporation. It's an LLC or a partnership. This is an entity that you have to register with the Secretary of State, and you have to follow all those rules. But here's what happens. This is a business that's split in half. So you have 50% here, and you have 50% here. The investors, they are contributing money into this business. They are 50%, they're the money, right? Now, Wise Guys and Ties, we're contributing to this business services. With our experience in helping people self-direct their IRAs, helping people invest their money, the real estate that we do, we provide services. So in this example, here's how fast this can start. Once you already have a self-directed IRA, how long does it take to set one of these things up? It took us 30 days, right? In 30 days, with these different business partners that came in, we raised, this is pretty cool, I can't wait to tell you. We raised in 30 days $406,000. All right? Because people have money just sitting there. What's happening with that money? It's growing. For all of these people here, it was growing somewhere between 1% to 3%. Now, some people I've talked to, they're making 8% gains. But what we're going to do, as you see in this, is we're going to exponentially increase these gains. So we raise $406,000. That's pretty phenomenal. Now, that means over here on the services side, Ray Fleming and I and Wise Guys and Ties, we're contributing $406,000 of services. So what are our services? We manage, we property manage, we do the rehabs, the real estate investing, everything that goes in. We're going to be talking about business credit, velocity banking. We do all the services. The money people, they sit back, they watch what happens, and they vote, thumbs up, thumbs down on the different projects that we do. So they do have voting rights. So here we are. This is the business model. So now we have a business that has $406,000. So what do you do with $406,000? Well, you're going to go and you're going to go buy something, right? We're going to create actually 2 new LLCs. And we call this one Alpha, and we call this one Beta. And this over here was called the 1,000 Doors. Can anybody guess what the goal of the 1,000 Doors project is?
What's the goal of the 1,000 Doors project?
In case you don't know, the goal is to own free and clear in the next 10 years 1,000 doors that pay on average $1,000 in rent. And when you're collecting $1,000 in rent on 1,000 doors that you own free and clear, that means your gross rent that's coming in is $1 million a month. So, whose retirement account is making $1 million a month? So the way that works is not everybody's getting $1 million. It's all going to be cut up and split up into pieces of pie. But at whatever rate that they came in, so let's say this person's investing 100, and this one's a 50, and we've got a 50 and another 100, another 100. Whatever you came in at, you're going to get that much money a month in your income. Now we have to take into account full occupancy versus vacancy rates, and there's all these little factors. So this is not the exact pitch of how the business goes, but we go through the pro forma and we show the performance of everything. So here's what happens. We're going to go out and we immediately set up a business, and then we set up 2 more businesses. Why did we do that? Because we're going to take this $406,000, and here in Alpha, we're going to buy a triplex. And over here in Beta, we're buying a duplex. Now, the value that we purchased this one at was $160,000. I mean, that was actually not for the triplex. I'm sorry, I got that wrong. That was the price for the duplex. That was the price for the duplex. So we actually paid $220,000 for this, and the duplex we paid $160,000.
Perfect.
Now, these were great deals because this is actually valued at $300,000, the triplex, and the valuation of the duplex was actually $200,000. So we already have instant equity when purchasing. Now, by placing the duplex and the triplex into its own business, gives us several benefits that I'm really excited to share with you about. So, let's back up. This was the structure, this is what we did. Now we own a triplex and a duplex free and clear. So there's no debt service, which is really great. And we purchased these with tenants already in them. So on day one, we already have cash flow. It's another important thing. So when you're hiring wise guys and ties to be your business partner, you're getting experience from real estate investors that know what they're doing. You could easily set this up, and if you don't know what you're doing, you could blow $406,000 and have your investors, really upset. Okay, so here's our setup. So if you're following along, here's what happens. We have to show you, there's a couple of things that we're doing right off the bat. Everything in a box, except for these self-directed IRAs. But over here, we're immediately doing business credit. Business credit. We're building business credit. It takes 6 months to get, I don't know if you can see this, $50,000 in lines of credit, right? Just at the start. So over here, we're building business credit. And over here, we're building business credit.
Beautiful.
This has the effect of having $50,000 in lines of credit attached to the LLC that owns the duplex, attached to the LLC that owns the triplex. Now, what's the biggest problem or headache that landlords face? Well, there's probably a few of them.
Toilets.
Tenants, toilets, termites, taxes. Have you ever heard those 4 T's? Whatever property that you have and you're renting out, your tenants are going to beat it up. The water heater goes out. There's a leak in the roof. The AC needs repaired. Well, whatever you're collecting in rent, you find, let's say you're taking in $1,000 in rent, but then you find that you've got to do an $8,000, a $15,000 repair. Well, that's going to wipe you out. But if you attach business credit to the business that owns each of these individual businesses, oh my goodness. Now, with $50,000, can we afford the repair that comes up? Absolutely, right off the bat, it's paid for. Pay for the service, pay for the parts, whatever, the labor that needs taken care of. But then we've got to make those payments. Is it easier to pull out $15,000 and make a payment right on the spot? Or is it better to leverage the credit and then make the monthly payments on that? Now, who makes the monthly payment? Do you? Or do your tenants? Your tenants. Okay, so you can take a portion of the cash flow from your rent to make sure. So this is another safety net that's added in. Now, business credit is awesome, but you have to understand that this isn't the only thing that has to be done. You've got to take into account that all of these need to have insurance. Right? You got to have insurance, liability insurance, right? And over here you have insurance. Over here, what we're going to have is an umbrella. An umbrella. So your insurance has certain levels, certain coverages that you have, and then you want your tenants to each have renter's insurance as well. And then over here on the big business, your parent company that owns everything, you want an umbrella policy for $5 million, right? That covers all of this. And these policies aren't as expensive as you think, and the cost of doing business, these are tax write-offs. Everything will flow to the bottom line. On top of that, you're going to want to get life insurance on your members, the life insurance policy. So here you've got Joseph Smith, you've got Ray Fleming, and then all of a sudden, bam, God takes us up to heaven. Well, this leaves all of the investors like, well, what are we going to do? Well, we insure the business for $500,000, and if anything happens to us, boom, everything's paid out, everything's fine. They could go hire a new investment management partner, or they could just cash out. And at any time, as the business grows and we have more assets and we can afford more, we bump it up. We, life insurance policy for $1 million, $2 million, whatever it is. So you put life insurance policies on the managers, making the members the beneficiary. So it's another layer. All of these are layers because is it risky to invest in real estate? You bet it is. And we have to do everything we can to put layers of protection. So if you own a triplex free and clear, like there's no debt that shows on this triplex, are there people who could take advantage of that? So people could look in the public records and see that you own that free and clear and think, maybe I'll just go slip and fall and crack my head, and now I'll sue you, and I know that you have the money to pay. And so what do? Well, we're attaching $50,000 in business credit that we're only going to grow, and then later we'll talk about how we leverage these. So all the debt that you put onto these entities and the insurance are veils of protection. So the entity itself, the fact that it's an LLC, that's a corporate veil. The fact that you have insurance on these, it's another layer of protection, another shield. The fact that you've put $50,000 of business credit, lines of credit, debt against the property, and more in the future because you can start tapping into the equity. Once you do all of that, and on top of that, there's an umbrella policy, there's a life insurance policy. All of these are layers of protection. Somebody is going to have to be willing to go to court for 5 years and pay all of these legal fees to get through every layer. Because do you think your insurance company wants to lose out on a claim? Do you think the umbrella insurance company wants to pay out money that they don't owe? Right? The corporate veil structure, all of that. These are ways that we protect our investors' money. But when you start taking self-directed IRAs, we're following all the rules, not doing any prohibited transactions here. We're the managers, we're investing this money. So here's what happens. Once you take all of this into account, you've got, now there's no debt, but you do have insurance. What's something else we have to plan for? Taxes.
Taxes.
You have to pay taxes on everything. You have to pay taxes over here. Every business is going to have to pay taxes.
We love taxes.
Taxes. But we're paying taxes, but we have a whole bunch of write-offs. Because does it cost money for the insurance? Did it cost money to set up the attorney and the corporate veil structure? Did it cost money to get the service from Wise Guys and Ties to build the $50,000 in lines of credit? Does it cost money for the life insurance policy? I mean, yes, all of this costs money. All of this is a deduction. Anything that you're investing into the properties to fix them up, maintain them, right? Another thing, let's talk about that. Maintenance. We'll just put maint, right? M-A-I-N-T. Maintenance. These are all expenses that have to be paid, but they all are tax write-offs. So that when I show you, so I'm showing you everything in red costs money, right? But now we have what's called rental income that comes in, right? The rent. And once you subtract out, so we have a fully loaded triplex, fully loaded duplex. When we subtract out all of the expenses, there's a leftover. After you've paid all of your expenses, the money left over, what's that called?
Ooh, what's that called? After you've paid all of your expenses,
The money left over is called what?
What's that called, folks?
Give you the initials right here. See if somebody can guess it.
Conan flow.
No.
Cash flow.
Cash flow.
Good job, guys.
All right, so off of the triplex, $1,172 a month.
Yes.
And then off of the duplex, $1,667 a month. Now, all of that money flows into here and then has to be distributed back, to all of the investors.
Yes.
All of the owners in the company. So wise guys and ties would get their portion, $1,419, and then the other $1,419 is then and it's, if you want to get technical, this is 50 cents, right?
Good job, Gary. Good job, Mike.
Right?
That's right.
This will be divided up amongst all the investors proportional to what percentage that they're in at. Okay, so all of this comes back. And we call this over here, this is called return of capital. Return of capital. So there's an initial investment, and what we're doing here is a cash flow split. Cash flow split. So in our agreement, everybody that came in, this $406,000 is going to be paid back over 5 years. But at this rate, by only in a duplex and a triplex, we're not going to get there. But here's a couple of things to look at. We're going to grow our business credit. That's going to be able to give us more money. We're going to purchase more properties. I'm going to show you that in a second. But we also have a life insurance policy, and when you overfund that, that has a cash value to it, and you can borrow against that.
Beautiful.
And if I haven't blown your mind yet, we can easily set up new corporate entity structures, transfer duplex out of that to the new entity, to transfer the triplex out, and we can sell these companies, say 2 or 3 years from now. Let's say there's someone here on YouTube, and you're thinking to yourself, I've always wanted to get into business for myself. I've always wanted to do real estate investing. Imagine being able to buy a company that's 3 years old and not having $50,000, but it has $300,000 in lines of credit. Already credit cards in the business name that you can use. And so it has a track record of having monthly payments. So it has a strong banking profile. All of this. This isn't some kind of shelf corporation that somebody set up 5 years ago, did nothing with, and now they're selling to you. This is a live company that is making money, has a track record of making money, has taken loans, paid it off. But because if we need money, we can sell this company. What would somebody be willing to pay for a company that has, imagine I sold you this company and immediately day one you take it over, you whip out credit cards and you have $300,000 to $500,000 of buying power immediately in your company. What's that worth? So there's a lot of different ways that can be sold. We could sell it for an upfront cash price at a discount, maybe sell it for $150,000. We could sell it, take a down payment, carry back a note. We could retain partial ownership of it. There's so many different things that can be done. Point being is because we have to return the capital, and that's required that we show in our legal documents how we return capital. We have a plan. We have several plans on how we can return the 406. As we grow, if we need to, we could sell the duplex and triplex because they're owned free and clear. And 5 years from now, there's a good chance it's going to be worth more. So this is a very successful business model. But if you look at this, you count, this is 1, 2, 3, 4, 5. It's 5 doors, but wait a minute. We said 1,000 doors project, so there's still 995 more doors we need to go get. How do we get there? Oh man, isn't this exciting? Is there anybody who's excited about this? This is
awesome.
This is how we make money.
Yes.
Okay, so here's what we need to do. The next purchase is a 12-unit apartment, complex. Okay, here it is. 12-unit apartment complex valued at $1 million. Right? $1 million. Okay.
Awesome.
All right. My goodness. How are we going to get that? I know we're just going to go back to the investors and say, you know what? We need more money. That's $1 million. We need more money. No, in our business model, when we ask for money from our investors, we only ask one time. And we create a self-sustaining business model that provides for everything. So here's how we do that. What are we going to do? What are you going to do? What are you going to do when they come for you? All right, so here's what we do. We're going to leverage everything that we have here, everything on the board. We're going to get what's called, on the triplex, what's that called? A non-recourse. A non-recourse collateral loan. Over here on the duplex, we're going to get the same thing. We'll just call it NRCL, non-recourse collateral loan. What does that mean, non-recourse? A non-recourse collateral loan. Well, it's the business version. You might be familiar with something called a HELOC, a home equity line of credit. You familiar with that? In a home equity line of credit, you as a homeowner can get a loan or a line of credit based off of the equity you have in your house. Similar situation here, non-recourse loan, which is really important because we are using self-directed IRA money. When we use self-directed IRA money, one of the rules is we can't allow creditors to go after people's retirement money. So if we're going to get a loan, we need to collateralize that loan. You ever heard of going and getting a secured credit card where you go and you put money into the bank and then you get a line of credit based off of that? Similar here. We put the value, we get an appraisal done. We have the value of the triplex. It's also looked at how much money it's performing, it's producing, the occupancy rate, all of that. We get all of that information together, the cap, all of that. So we put all of that together and we get a value. And so the value for the non-recourse loan, again, you're going to get a portion of the total value. So you're not going to get everything. You're going to get anywhere from 70 to 90% of what your equity is. All right, so when we take these loans, we come down here and we use that for a down payment. So between a $300,000 and a $200,000 triplex and duplex, I think we could comfortably come up with at least $250,000 to $300,000. But I think we're going to come up with $300,000, but we're going to save 50 of it for some improvements that will probably need to be done right off the bat. But we're going to put the $250,000 down. So we've got our down payment. Perfect. For $1 million, we put a quarter down. Now we have to get the seller to carry back $750,000. Well, who's going to want to do that? Well, not a lot of people want to do that. So now we have to go get another loan, and we get that from here, from this company, the Thousand Doors Project. We get another non-recourse, but this is a little bit different. This is going to be a non-recourse commercial loan. Non-recourse commercial loan. What does that mean? Well, if you listen to Ray and he talks about all the different kinds of lending, non-recourse commercial loan is where you actually take the value of the asset that you're purchasing and you put that up as value. So if you don't pay this loan, the bank gets your property. And you don't pay these loans, right? Then the bank gets those properties. So here we've taken the two properties that we own and the property that we're buying, we've leveraged all of them into loans. Oh my goodness, that means we've got payments. Well, again, this is only done when the 12 units, the cash flow coming off. See, again, let's go back because we've got to make sure you guys understand. We're paying for insurance on this. We're paying taxes, right? We're paying maintenance, right? We're still paying all of that. But don't forget, what are we also doing? We're also doing business credit,
Business credit, folks.
right? So we got, 50,000 in business credit. All of this is being set up. Now, we have to, from the cash flow, we talked about cash flow. The cash flow, sorry here, I know this is getting a little messy, but each of these lines, so this red line, that's the loan. So the cash flow pays back this loan.
Love it.
Cash flow here pays back that loan. Cash flow pays back this loan. Then what's ever left over comes over here. Back into, this is, remember all these green arrows represent the cash flow. Cash flow going back into the Thousand Doors project.
Beautiful.
Which then is, you do the cash flow split back to the service partner and the money partners. Okay, but we're not done because it doesn't end there, because a very critical component is VB. What could that mean?
Uh-oh.
VB.
Folks, what does VB mean? This is the trifecta. This is the financial trifecta.
This is the cherry on the top. Okay, here's what happens.
Tell us what it means, Professor.
Velocity banking. Anybody here on this YouTube channel ever heard of a term called velocity banking? Sometimes known as speed banking, cash flow checking, infinity banking. It's got so many titles. Debt reduction strategies, mortgage sweep, all of these. All right, velocity banking. It's a very simple principle. But look at all this. We're making all these payments. But we've got our business credit here, we've got our business credit here, business credit here, and business credit here. 50, 50, 50, 50. That's, at a start, $200,000 in lines of credit. We're going to have bank accounts, because we've got to have bank accounts to grow business credit, but we're going to run everything through our lines of credit. So we're going to take out huge chunks out of all of these debts. This non-recourse collateral loan, this non-recourse collateral loan, this non-recourse commercial loan. Going to constantly take chunks out of it, because these loans, they're going to be anywhere from 15, 20 to 30-year loans, but we want to pay them off in 1/3 the time. So we're going to convert all of that amortized interest into simple interest in our lines of credit. And these lines of credit are going to grow, right? It's not going to stay at 50. In 2 years' time, it's going to be at $100,000, $200,000, $50,000, each of them. And the more we use these lines of credit, the more they grow, as long as every payment is made on time. So then you can take out more chunks, right? And what do we do with that? We can either take out more chunks or we can buy more properties. But as this debt goes down, what happens here? We increase our equity in the property. We begin to go from being upside down to now having equity very fast. In just 3, 4, 5 years time, we already have this thing paid off, 50 to 60% of it paid off. Now we get another loan. We can get a loan to pay off our investors, because we've reached the 5-year mark and we want to make sure we've paid them all back. We can sell off. Remember, this is its own LLC, right? So we could sell off these LLCs. We could, because we've been funding the life insurance policy, we can borrow against the life insurance policy. We can purchase a new building. We can flip any of these. We could sell this, make a huge amount of profit, pay this off, and because in 5 years it's no longer worth $1 million, it's worth $1.75 million now. And the possibilities are endless, and you keep growing this. And here's what happens. You now, instead of when you go to buy your next building, when you leverage this way, you don't buy a 12 unit. You now go out and buy a 300 unit storage facility. You go buy a 1,000 unit mobile home park, right? You go ahead and you start buying other apartment units that now, because now you can start leveraging your money and you have a track record, right? You've been building a track record, so the lenders want to lend to you. You're already showing that you can take payments. You've got all these monthly payments coming in. Banks love to see multiple payments coming in. The more and more payments coming in, the lower the risk factor rating that the bank gives you, which means the more money they're willing to lend you. So this is all how this works. So we have taken self-directed IRAs. We've combined it into a LLC partnership. Then we use that to form other LLCs and the power of business credit to fuel velocity banking. With the rent payments that are coming in, the cash flow pays this off. And I don't have enough space here. It could take a whole nother board, but we have 3 different models where we could take a whole bunch of debt and go get really about 2,500 doors, sell off, because we owe money on all of them, but sell off half to pay off the other half to owe them free and clear and meet our goal. And we have other means of using contract for deed. We have, help me out, guys.
Well, contract for deed, we got lease
Wraps,
options.
lease
options,
options,
yes.
subject to
lease
financing.
options,
Yes.
master
So,
leases.
I'm telling you, we've got like 15 different
folks.
tools
Just let us
of how
know.
we can acquire it. And so what happens, say you're one of our investors and you're sitting there, looks good, but do you remember what happened in 2008?
Uh-oh.
Sure, I remember what happened in 2008. That's when everything went on sale. Okay.
When there's blood in the streets, it's time to buy.
No, I'm not saying I don't. We're probably the only people that get excited when there's economic calamity. When you have a strategy like this,
Oh, that's beautiful.
so the power to sell these properties for a profit goes away, but the ability to purchase properties doesn't. Now, when you have built excellent business credit and you have assets, multiple assets like these that have cash value, even in a down economy, you still have tangible assets that are cash flowing, because people still rent in a down economy. You're one of the only people that can have liquidity. When the banks stop lending and they start tightening their lending, these are the only kind of people that can find money. And what do you do with this money? You buy everything that's on sale and you bail everybody else out who's upside down and underwater in their mortgages. That is self-directed IRAs, business credit, and velocity banking all in one.
Wow.
Now, to help us better understand how you can be a part of this, I'm going to bring up my business partner who's going to talk a little bit more about self-directed IRAs. Who's going to talk a little bit more like, what are you going to do? Get that. He's going to talk about velocity banking. Well, what if you don't know how to do velocity banking? And business credit, where do you go? Well, you go to none other than my good business partner, the guy. See, I'm the guy who goes up on the board with colored markers and I draw things, all right? This is the guy who...
There. Self-directed IRAs. It's a fantastic concept. Who knew? It's the biggest pot of readily available cash in the country.
How much cash?
Whew. Last time I checked,
A lot.
there was okay, so what's the national debt at? We're at like somewhere like 30 trillion,
No, 20 trillion.
20 trillion.
20 trillion,
2 trillion.
22 trillion,
Somewhere in there.
Yeah.
somewhere in there. Last time I checked, we were somewhere around 27 trillion is actually in the stock market in different areas. 18 trillion
Wow.
is available for this use. So, let's see, that's 0, 0, 0, 0, 0, 0,
3 more zeros.
0, 0, 0,
Dot 00.
dot 0, 0. Okay. That is how much money is out there crying, bleeding, dying. You need to go save that money. That money is out there being destroyed on Wall Street. I'm sorry, they just don't care about your money. And if you care about your friends and family, you need to help them out and get them into a better situation. But I'm not saying you just go out there and do it tomorrow. You need to know what you're doing because you don't want to go lose all those funds. That's reckless. I would never encourage you to go out there and just do it. But if you go out and you just take a small portion of that, just a small portion, all you need is 0.0001%. That's all. Just go get that little piece. That's it. That's a whole lot of cash. All right, now how do you do that? Well, we did not just go out and do this. We didn't just jump out of bed and say, hey, I saw this on YouTube. Let's go self-direct Aunt Jemima's thing. And Aunt Sally and I ate pancakes this morning.
Aunt Butterworth.
Miss Butterworth. That's the only thing that came to mind today. Man, pancakes are so good.
Yes.
We should have a cooking show too. By the way.
Good to see you.
No, I spent a lot of time learning about this. CJ has spent a significant amount of time learning about how to properly self-direct IRAs. Has experience using that in real estate investing, fix and flipping properties. If you have a desire to get rental properties, to fix and flip properties, where are you going to get the money? I don't use any of my money. I do not. And I own rental properties. It's a creating of a win-win situation. How did I learn? I went to the professionals in the industry and learned from the top best guys in the nation. That is how I learned. Yes, sir.
Yes.
How much does it cost someone to learn how to self-direct the IRA, all those rules, how to put it into the LLC and all that? What would that cost somebody on their own to learn how to do that?
Just
To do it the right way.
A regular Joe Schmo off the street? Or
Yeah. Okay, so let's just add to that. How much did I pay for that? Well, I've paid a lot of money on trainings and classes and stuff like that. But for only $2,000, that's it. $2,000. How would you like to work with the top professionals that are going to teach you about velocity banking? It's a full course. We're talking trainings, we're talking tests, workbooks. You're getting the maximum value here. And what about your personal credit? We talk all about business credit, but how do you manage your personal credit? Well, there's a whole class on how we change the world on personal credit. We're talking classes, tests, workbooks, amazing stuff.
Study groups, coaching.
So we have some study groups that are happening every single week because we realize the need for all of this. And CJ, Joseph Smith, myself, we are helping other people make a change. And we brought in the top of the top professionals to help along the way. So learning velocity banking, learning, working weekly, answering all your questions, your personal credit, several different classes on real estate. We have a class on real estate marketing. We have the pitfalls. So what to watch out. We have the red flags.
There you go.
The red flags class. This is every single thing to watch out. Now, when we got these trainings, these are not some small little things. These are not YouTube videos. These are 8 hours on each subject, tests, in a specific training. We need to make sure that when you want to go out in real estate, you want to go self-direct your IRAs, you want to use it for business, that you treat it like a profession, because it is. Too many people go out there, hey, no money, let's go wholesale properties. You're messing with people in desperate situations. It's reckless. So we'll show you how to go out there and be creative. We will show you 10 ways how to acquire properties without using any of your own money or credit. Would you like that? Could that be beneficial? Say you've always wanted to buy a house. We will show you how to go help somebody in a bad situation, get them out of that situation, and you get a house. How about that? I know people that have done that, and they have literally been paid $5,000 to get a house. So imagine being paid to get a new home. It happens because there's people that need your help. And the people that are on this line are dedicated, and I know you're dedicated. I know you're dedicated to CG. I know you're dedicated to yourself. And I applaud that because too many people out there are not like you, and you are amazing at what you do, and keep up the good work. So,
Awesome.
we still on? We're working? Yeah. All right. So we're going to show you how to creatively acquire things. We're going to spend 7 hours with you on that. We're going to, now, what's the big thing? What's the thing that everybody's so worried about that changes and we have to pay every single year and file every year? Taxes. How about, we're talking almost like 14 hours with my top of the famous TV star CPA,
Best buddy.
who runs basically, who runs a multi-state huge CPA firm. He shows you how every single thing from just the simplest write-offs to how to self-direct your child's retirement. Imagine that. Self-directing a child's retirement, paying your kids tax-free so you can get anywhere from diapers to prom dresses as a tax write-off. Imagine that.
How many tax write-offs are we talking about?
Over 400. We want you to take advantage of over 400 tax write-offs. I don't even claim all my write-offs because it would just be bad for the business because I want to show a little bit of profit, but I end up wiping everything out with tax write-offs. It's amazing. What else we got? We got velocity banking. We got a class on that. We got
Self-directed
personal
IRA.
credit. We got, oh yeah, the big one, self-directed IRAs. We use the top attorney in the country. He's the guy that has the #1 book on self-directed IRAs.
In the country.
He is the guy that the IRS calls to find out how people are screwing them. That's and he's a consultant for the Internal Revenue Service of America. That's the guy you want to learn from. That's the guy who's going to show you how to put rentals in a child's IRA. Those are the people that I learned from. And so when I go out there, I have confidence, I have ability. And like CJ was saying, you don't just step out there and learn to walk. You don't just step out there and learn to run. You don't go and do math. You need to learn how to do the math so you can go out there and create systems and multiply to save the world. That it can't be done recklessly. Don't do it recklessly. Learn what you're doing.
How about this? I got this
right.
question.
What else we got?
Here's this question. You know how I just showed everybody the 1,000 Doors project?
Yes.
If somebody paid $2,000, are they going to learn the foundation that they need to create something like that for themselves?
You will have a very good starting foundation. We'll show you how to go through probate in the court system, how to solve problems in that. So we have self-directed IRA. We have the marketing real estate class.
Buying real estate,
real estate
selling real
marketing, real estate foundation. So everything you might learn going to a realtor school. Am I missing any other classes?
No, you got it.
There's 11 classes here. So for $2,000, we have 11 classes with tests, pre-tests, post-tests, weekly group coaching. So we have weekly study groups, weekly coaching on a private webinar. And how long do you think we're going to let you have access to these classes? How long do you think how often do the tax laws change? They change every single day. But they change every year. So would it be beneficial if you could review that over and over? And what happens next year when the tax laws change? What if you could review it again? Well, with this on-demand, live, continuously recorded, updated, access with tests and coaching, we will, as long as you don't abuse it, life.
For life.
Wait a minute, are you saying that these are old courses that were recorded back in 2011?
Nope. Continuously updated, always updated with the newest, hottest content.
Every year?
And we will give you access every single year for only a one-time payment of $2,000. How amazing is that?
That's awesome.
Only $2,000. I did it, and that's the way that I have learned. Now, I've spent a lot more on classes than that. I have actually spent over, I've spent a lot of money. But out of reviewing all the funds that I've spent, it came down to what was really beneficial and the real price point that I needed to hit. So after I reviewed all the classes that I've taken, all the seminars, everything like that, I added up that out of all the classes, there was $20,000 that I ended up spending. $20,000 I ended up spending on all the classes, all the seminars, everything I've ever gone to. I can relate all the money I ever have made and been able to not lose. To this day, we have never lost a single penny. And I don't need to knock on wood because I am educated. And if you were a doctor, if you go to school, you got to go to school if you want to be a true professional with this. And we can show you the path. But it all starts here. Investing $2,000 into your education, $2,000. And guess what? We will offer a very nice special. Oh, the board is sinking.
Oh.
Are we sinking? Or am I just getting taller? All right, hold on. Okay.
Here we go.
Oh, man. All that working out that you do.
Or hardly working. Okay, so $2,000. Okay, did anybody even see that? Were you even able to
I
see that?
didn't. That's amazing.
They need to contact
CJ Wallace. So to gain access to some of that $18 trillion the right way,
18
I
trillion
want
folks.
you to. Oh, because we're running a special too. These guys don't know about it, but if you sign up for classes, you are going to get. We're not even going to talk about it on live television because it might upset some people. But if you're already in the business builder, the business credit builder, contact us. But if you want to get the business credit builder and you want to get into this, we have an outstanding smoking deal for you. Because right now, the business credit builder is at $2,997, and you are not even going to pay that. And I don't even want to tell you how much we're going to be taking off, but we have a super special package that has taken place, combining these two together for you. If you contact CJ Wallace and just say, hey, I want to know more, CJ. What are you guys talking about? There's some way I can walk out with the knowledge to know how to thrive in real estate and rentals and create long-term wealth for my family? Yes, there is. So you want to email creditwiz at investorpro.org. All right, so email CJ at creditwiz.org and just say, I need more info. CJ, let's get on a call. Let's talk. CJ, have me get in one of your team members and let's chat about how this super smoking deal on learning how to build your business, because this is going to show you how to build your business, and then at the same time we're going to get you the money. So once you're done taking your classes, you have the funds to go out and start doing real estate. It's what I encourage all of you to do. Do it the smart way, do it the right way, and do it with us. So if you have any questions, reach out. Once again, contact CJ, investorpro.org. Let's get you started with the Business Credit Builder, helping you build $50,000 in lines of credit, no personal guarantees. Now, if you have good credit, we can find you a whole lot of money in the next few weeks. So we can talk about that as well. But folks,
CJ's got an announcement.
yeah, I'm gonna bring CJ up here. I'm excited. I'm excited to work with you. I'm excited because of what you're doing in your life and what you're already doing for your family. So once again, I applaud you. Congratulations, because we're that very select few people in this world who are actually doing something that was going to help others. So continue on, and I appreciate you. All right, Mr. CJ, what do you got for us?
Oh man, let me tell you something. I know, just like you know, that a mind is a wonderful thing to use, right? That you need the education, okay, for real estate investing. If you want to know what velocity banking is all about, if you want to know business credit, folks, we're going to do something that we have never done before. Should I offer them the price right now?
Well, Ray didn't want to tip it off, but this
Okay.
is your show. You're the host.
Okay.
You go ahead and tell
You want me
him.
to raise
Okay,
something?
all right. You know what? How many think that all of this education that we just presented to you, how many of you think that it should be at 8,000? I mean, really, because we spent a whole lot more, all right, on the education. But I know that there are a lot of you that are in situations like, for instance, one of you even told me, listen, I had a tragedy in my life, okay? I had some things happen, and I want to make my mama proud. I want to make my kids proud. I want to make my family proud. I want to have legacy wealth. So listen, we dropped it down. We dropped down the price so that it can be affordable for you. You know that I've already showed you how to pay for things with your lines of credit and with your credit cards. Folks, right now, I'm going to let you know the price of the business credit builder and this real estate investing education. You and I both know it's worth, over $20,000 in value because of what you get in return. We're talking about tax and legal, folks, from a guy who makes this look so easy, and it's hilarious how he brings it across, and it's so simple, okay? All of these instructors, they bring it down to our level, all right? So that we can teach this information to you. We're going to show you the price, all right now. All of this. We're talking about all that you see right now, the lifetime guarantee. We're talking about the deal of the decade in real estate investing, as well as the business credit builder. I know your mind is blown, but we want to show you what the price is, okay? We know about the velocity banking strategies, but we want you to know even deeper. Folks, the price. The price is $2,997. Should I add a couple more zeros?
Now that's for the business credit builder, though, right?
This right here for the business credit builder?
Uh-huh.
And what happens when you add in the that $2,000 for all that real estate investing, velocity banking, and IRA training?
That's $5,000.
You know what? $2,997 plus $2,000 is $4,997, folks. Right? Now that's an extremely fair price. Actually, it's low for everything that you get. But if you call in tonight, if you email me, creditwiz@investorpro.org, and say, CJ, I want in, you get this price for both the business credit builder and the real estate investing education.
What?
All of it. Now, before, remember, the price was $2,997 for just the business credit builder. But if you call tonight, right? If creditwiz@investorpro.org, if you email tonight, you get this price for both of these. Business credit builder and the real estate investing education. Why did we do this?
Because you're crazy.
And you know what? We're crazy about educating you. Many of you have called in and said, man, can I donate something? Can I donate something to you? One of you even paid off your car, right? Paid off your car today, actually. Congratulations. By using the velocity banking strategies. And Ms. Bernie said she paid off her house in 1 year. $148,000 house in 1 year by utilizing the velocity banking strategy. And folks, you only got some minutes of the velocity banking strategy. We didn't even go deep into it. But you get all of the velocity banking strategy. You get all of the self-directed IRA education. You get all of the deal of the decade, which, by the way, comes along once every week.
Lifetime coaching.
Lifetime coaching. Now, this isn't just any coach, okay? This man has done it, all right? He's done it. He's actually a very successful real estate broker as well as a successful real estate investor. And what he does is when you ask a question, he answers it in such a way where you'll actually know the question that you didn't ask. It's amazing, okay? And he'll walk you through it, okay? Now, this is nationwide. It doesn't matter if you're in Hawaii, Washington, California, New York, Maine, Texas, or even Arizona, all across the nation, all 50 states. This is available to you, all right? Now, you do know how to pay for it, right? Now, I'm just letting you know, if you are struggling on how to pay for it, I can show you with your lines of credit, okay? And this is an amazing price. You know it's an amazing price. $2,997 for both the business credit builder and the real estate investing education. Now, it's not just velocity banking, because we can charge a lot more for the velocity banking, but you get this for yourself. Now, why do we do this? Because we want what's in our heads to be given to you. It's all about empowerment, folks. We are all about empowerment, and we want you to get in on this. Woo! Fellas, do you have anything?
I think you're incredibly generous. I don't know. This is the best deal I've ever seen. I see people already saying,
I was thinking like maybe $4,000. You're nuts.
hey, but
Right,
hey,
right.
this is your show. You know, this is your
You
business.
just gave $2,000 off.
Oh, yeah. Yeah.
You realize that?
Oh, yeah.
And let them
It's worth it.
let them know that you're still,
Yeah.
you're still paying. You're basically giving up your commission to these folks.
Yes, yes. And you know what? You know what? Because you're worth it. You know what I mean? And I can't wait to hear your testimonies. I love the testimonies that come in. One man said, man, CJ, you know what? I got a black card now because I utilized your velocity banking strategies. You know what, CJ? I paid off this, that, and the other. My credit score rose.
Oh, hey, here's a question that came in, wanting to know if they can make payments.
You want to make payments? Hey, yeah. Hey, you can make payments. Listen to me. Go ahead and make payments on your line of credit, folks. Oh, it's so much better. Yeah, your line of credit. Make the payments on your credit card. Make the payments on your line of credit. But get this right now. Absolutely. Because what that's going to do, it's going to strengthen your credit as you continue to pay it wisely, as you continue to utilize the velocity banking method in paying down that line of credit and paying down that credit card. Make the payments. We're all for payments to your line of credit, to your credit card, because we want to hear those testimonies of, oh man, I never thought about that. I'm saving so much more in interest by not getting a loan, right? By not financing with the amortization, but by getting the simple credit, by utilizing simple credit, by utilizing the debt transfer to get rid of those loans, to get rid of the student loans, to get rid of the mortgage, all right? To get rid of. All right, now listen.
You've got people saying great stuff, and they love the 401k stuff. You got people saying they want in.
Get in. Credit Whiz at investorpro.org. You're going to get an email from me personally tonight, okay? You're going to get an email from me personally tonight letting you know that we're going to go ahead and get you connected, all right? I'll send out the necessary elements so that you can get started right away. We want you started right away, folks, right away, okay? And that's how we do business. So listen, folks, do you have any more questions? Absolutely. We're opening it for questions. Fellas, if you have any questions, absolutely. Yeah.
What about, you talked about this does not include velocity banking. Now, my understanding is you've got some exciting velocity banking news in the weeks ahead where people are going to be able to start getting velocity banking coaching. Isn't that right?
Folks, this is where we go one-on-one with you. We're going to help you out. We're going to help your business out, learning the velocity banking strategies, holding your hand. through the process, showing you step by step, getting spreadsheets out and making it simple for you, okay? It's not going to be a challenge at all. It's just going to be new, and we're going to show you step by step how we do what we do and how you can pay off, right, your loans. Pay off any loan, any amortized loan, any loan that you have, we're going to show you how to pay off. You say, CJ, what? But I got a payday loan. I got a payday loan. Folks, watch this. Watch this. Just an example. What about payday loans? Okay? What about them? What about taking out a $5,000? This is going to sound crazy. What about taking out a $5,000 payday loan and then transferring that to maybe a line of credit, secured line of credit that's maybe it's 7% or 8% APR. And then you're going to go ahead and take that line of credit that you have and start paying off those loans. Folks, listen, I'm not going to get too deep into that. I just want you to know that there's so much more to this thing that meets the eye. We're going to do that one-on-one consultation with you.
The thing that I thought was exciting about the package that you're putting together is that people are not going to even feel the cost. No. It's built in to the velocity banking. That's the part I thought was really cool.
Yeah, so you're not even going to feel the cost because it's already built in to the velocity banking system. It's beautiful. Oh, it's so beautiful.
Okay, so awesome. you got some questions here. You got people
37 segments, folks. You got 37 segments.
Is this an online class? Someone's asking.
Yeah, is this an online class? You're talking about the real estate investing? Yes. Yeah. So what happens is you'll go in to the online class, right? And you will have these classes available to you. And you're talking about the real estate investing education, right?
Well, could somebody take these classes live at the campus where they're taught?
Oh my word. I didn't even bring that up. Yes, you can. You can take it live at the campus, which is paid for, by the way, right? How many can say that? Paid for, folks. So, I mean, we're real estate investors. Of course, we pay for stuff. And
you can live stream too.
You can actually live stream this as well, okay? So what we're saying is we're updating the classes. You're not going to get behind. This isn't something that we made up in, 2011 or 2007, okay? These are current classes, and you will continue to get the current classes, okay? Your lifetime access to the real estate investing education.
Will there be a replay of today's show?
A replay? How many want a replay? Huh? Listen, folks, we do this every week, and it just keeps getting better, right? So that's why you don't want to miss one episode that we do, not one, all right? Because you never know what we're going to do. We have a whole lot more we can cover, okay? Somebody asked me about the velocity banking strategy and the overfunded whole life insurance accounts. Folks, we know about that, all right? And we can show you how to grow the money guaranteed. So, man, online classes, yes, they are online. Is this going to be a replay? Folks, just tune in every week. Just keep on going. Okay. Hit that bell. Hit the thumbs up, comment, say, man, this is awesome. All right. Say, hey, I want in. I want to get the $2,997 before it goes up to $10 million. All right. Because you know the value is there, don't you? Did you like when Joseph laid it all out for you? How he brought in the
CJ's kind of crazy, so we're not going to let him do this cheap anymore. If you've been on our thing before, we know the price always goes up.
Self-directed IRAs, velocity banking, business credit. Do you like how he married all of them together? It's amazing, and you haven't seen anything yet. So $2,997, that's all that you'll pay for the business credit builder and the real estate investing education.
Now they could finance if they wanted to, but they're going to pay that price. They'd have to pay $5,000, and they have to put $2,000 down.
Right. So I mean, you can finance if you want to, folks, but it'll be a total of $5,000. All right, and you'd have to put $2,000 down, and this is way better. Okay,
yeah.
so this is way better
with like $300 a month payments. So yeah. That's for them to use their credit card.
Yeah, just go ahead and put it on your credit card.
What if you don't have the money?
Yeah. What if you don't have the money?
What if
Guess
you don't
what?
have the money?
Guess what, man? We can help you find the money. Duh! That's what we do. All right? We can help you find it. Credit Whiz at investorpro.org.
Man.
Let us know. Let us know.
And there was a number up here that said like $18 trillion. Did you know that you could actually use some of that to pay for that? We'll show you how. So there's no shortage of money, folks.
No shortage
Work
of
with
money.
CJ.
No shortage of money at all. And I think we needed to add 3 more zeros onto that 18.
I think so.
But,
Is that
but folks, go ahead and just let us know what we can do to assist you. Credit Whiz at investorpro.org.
Or they can go ahead and call in as well. Go ahead
Now,
and write that
what
number.
I want you to do right now, though, okay? We do have a number for you. I know many of you are already you're asking, man, why don't you just give us a number? We're going to give you a number right now, all right? We'll give you a number right now.
Just write it right under investorpro.org.
Yeah, I'm just going to write that right under investorpro.org here. That number is 188. Okay?
524.
9273.
9273.
I'll throw it in there.
So 1-888-524-9273. Or 1-520-276-7575. The folks that brought you Velocity Banking, self-directed IRAs, business credit, have a whole lot more to bring you in the year 2019. Do yourself a favor and make yourself the priority. $2,997 is not too much. How much did you spend last year? You know you spent over $2,997 last year. But what did you spend it on? What did you spend it on? And what do you have to show for it? We want to give you houses. We want to give you property to show for it. We want to give you more education to show for it. We want to give you cash flow to show for it. That's over $2,997 a month. We want to show you how to do that. So folks, one more time, 1-888-524-9273 or 1-520-276-7575. Go ahead and call today. And I'm going to part with this. I'm parting with this. Do today what your future self will thank you for. And when you invest in yourself by getting the real estate investing education and the business credit builder and marrying them together, you'll be thanking yourself continually. All right, folks, God bless, and you all have a great night. All right? Again, any questions, Credit Whiz at investorpro.org. We're here to help you. All right?
Man, that is, I can't believe you did that, CJ.
Oh, yeah. Oh, yeah. I'm serious. That's the price. One time, too.
But they have
call
to,
tonight.
they have to call tonight?
You got to call tonight. Yeah.
What if they watch the recording tomorrow?
Ooh, if they watch the recording tomorrow, that's a good one. If
You have to see if CJ's having a good day or a bad day.
If you're watching
The price will
tomorrow,
have gone up. We just don't know how much.
Yeah. So just to let you know, the price would have gone up, but we just don't know how much yet. Okay. So the best thing to do, just call right now. Why? So you can enjoy it right now. So you can get continued right now. All right. Figure out the money later. Just call now.
What does Charles Branson say? If somebody offers you an amazing opportunity and you're not sure you can even afford it,
Okay.
say yes and figure out how to pay for it later.
There you go. That's figure out how to pay for it later. I came from a billionaire, folks. Okay. And so what we want to do is give you the same opportunity. All right. You guys have a good night. God bless.